Good evening, everyone. Thank you for joining Corporate Connect. I'm Lucas Ng, and I'm your host for today. This evening, we welcome SingPost as well as our audience from Relive. This webinar is organized by SIAS and supported by SGX Group. We'll kick off today's webinar with a corporate presentation by Mr. Vincent Phang, Group Chief Executive Officer, together with Mr. Vincent, Group Chief Financial Officer of SingPost. And we will move on to the Q&A session moderated by Mr. Sunny So from SIAS. SingPost is a leading provider of postal and e-commerce logistics in Asia Pacific, serving over 220 global destinations. Based in Singapore with over 4,900 employees and offices in 13 countries, it offers integrated logistics solutions since 1858, prioritizing people and the planet. So without further ado, let's invite Mr. Phang and Mr. Ek to share with us their latest business updates. Over to you, Mr. Phang.
Hi, evening everybody. Hope you can hear me. And hope everybody has had dinner. Perhaps this will take about an hour, so welcome to the session, and we hope to get some feedback from you as well. So let me start with a presentation between myself and Vincent, who will speak through some of the numbers later. Over the last few years, SingPost has gone through a very profound transformation, as you're aware. We have made a strategic reset with the pivot to logistics, and we continue to build capability on our pervasive postal capabilities. Coming out of the pandemic, this progressive development has yielded near-term positive results, and we're happy to say that this has positioned us on a growth path. The recent postage review has also provided us a significant adjustment in postage tariffs, which now reflects the true cost of unit deliveries. This, together with the additional growth in e-commerce volumes in the last few months, has brought the domestic postal business back into profit, and I'm happy to announce that. Through discipline and systematic acquisitions, we have built a significant and profitable business outside of Singapore. In Australia, we have, over the last few years, been hard at work building this business, and this is now a top 5 logistics business in Australia by revenue. Together with our international business, the revenues generated overseas now account for more than 85% of group revenue and operating profit. It is with this setting that we undertook the strategic review. Now, let me cover some of the objectives of this strategic review and why we actually went about doing this. We appointed a financial advisor, as you're aware, Bank of America Securities, to assist us in this strategic review. The key objectives are these. 1, to understand the gap between the intrinsic value of the enterprise against the current market value as reflected in the share price. 2, to review the opportunities to strengthen our balance sheet. And 3, to reorganize the business towards growth. And in doing so, create and unlock value for our shareholders. Through this exercise, we have identified 5 strategic thrusts to be executed over the next 3 years, setting out how we will structure the organization and manage the capital, as well as deliver growth through each one of the businesses. On the first thrust, we are reshaping the group structure to support our pure-play logistics operations. The group structure is now streamlined with 3 operating businesses in the markets of Singapore, Australia, and international. The businesses will be led by their respective CEOs and management teams and will have operational autonomy and flexibility. Group headquarters will continue to facilitate strategy, digital, sustainability development, as well as holding all investments and non-core assets centrally. This reorganization enables greater clarity on the distinct attributes of the individual businesses and markets, as well as their individual strategies and market drivers. With each business, their mandate is to grow, develop capabilities, and be a leader in their distinct markets. With the clarity of the segmentation as such, investors will have a better understanding, a clearer assessment of the business performance and valuation against comparable market and sector benchmarks in logistics, which is far more meaningful than the traditional postal comparisons. Our CFO, Vincent, will now share how this reorganization is reflected in the financials, as well as share on his views of the second strategic trust on capital management. Vincent, over to you.
Thank you very much. Good evening, everyone. So with this restructuring, we will be reporting the new segment starting with the next financial year, FY 24-25, beginning 1st of April this year. So this segmentation is a change from the present segments of post and parcel, logistic, and property to the geographic markets of Singapore, Australia, and international. So the key driver of this change really is that we are no longer a postal organization. So you will see that each and every one of our business is now a logistic enterprise, a logistic business in its own market. So as the breakdown on the slide that you can see now clearly shows, SingPost is an international enterprise with very significant contributions outside of Singapore. So the attribute of the business and the operations of each new segment are different, with distinct market dynamics, drivers, as well as strategy. So looking at these slides, there are a few key items that I would like to call out. So on the left, you see is the original segment that we have always reported. And on the right, it is the proposed new segment on a pro forma basis. So first, you can see that the size of each of the individual markets in the new segment quite clearly now. You can see that Australia is now the largest contributor at over half of the group's revenue, as well as operating profit. So as we have reported previously, evolving dynamics still affected the business as we transition out of the pandemic in FY 22-23. So there was an 11 million operating loss in the Singapore business. But if you dive down a little bit more, the post office network sub-segment within this alone incurred a 21 million loss, meaning that the delivery network, the delivery business of the Singapore business has been profitable to the tune of about $10 million. But while it is profitable, it was not able to offset the loss given the accelerated contraction in the letter mail volume. And this was before the recent postage upgrade, which has gone a long way or some way in helping to bring this segment back into profitability in Q3 of this year. So this segment is now relatively smaller, and the loss of the post office network is also now clearer to everyone. So in the international business, there was a loss of 30 million last financial year. But in this loss is solely due to the first half when there was an impact of the Ukraine war and the China pandemic breakdown. As we have previously reported, this business has now been profitable thereafter and continue to see improvement in margin in the several quarters since then. So for Australia, we have now also included the pro forma financials from our recent acquisition, Borders Express. So these Borders Express numbers are unaudited and before the acquisition. We have really included this number here to show the pro forma impact and the transformative impact of the acquisition to the Australian business. So in the corporate center, we have the property portfolio, which includes the SingPost Center, as well as our freight forwarding business, Famous Holdings. The operating profit from Famous Holdings, while continues to be positive, it has now since come down from the post-pandemic high in line with the freight forwarding market globally. So fast forward to the latest third quarter as outlined in our financial updates last month, there has been much tangible progress. So all businesses in all segments are now profitable in this quarter. So the Singapore business is profitable with the postage upgrade and e-commerce growth. The international business is now also profitable with the re-engineered business as well as better cost in the air freight market. The Australian business continues to show the expanded contribution from the transformative acquisition of Borders Express on a pro forma basis and now exhibits best-in-class profitability. So with the new segment reporting, we intend for further transparency and disclosure to help investors better understand the group and appreciate our investment proposition, which leads to my next slide on the illustration on intrinsic value. So in this slide here on the left, you can see the market capitalization from a couple of days ago. This is before, obviously, the share price increase over the last couple of days. So on the right, we present a very visual illustration of the various components of the group. And here you can see one, the portfolio of businesses within the group, which includes the very profitable Australia business, the re-engineered international business, and our flagship Singapore business. And number two, under the corporate, you can see our property portfolio, which includes the SingPost Centre. The SingPost Centre alone is independently valued at just above $1 billion as at 30th of September 2023. And then there is also the famous holdings and the other properties as well. So given this simple illustration, and together with the group's growth potential in the logistics space, the conclusion is rather obvious. So hence, the board has communicated its view on our intrinsic value is not appropriately reflected in our current market value. So now I move on to the second strategic thrust on capital management strategy. So one of the intent of the strategic review is to strengthen our balance sheet, including reviewing the credit rating and monetizing of non-core assets, the recycling of capital for growth, and also reviewing our dividend policy. So we have identified businesses and assets that are non-core and non-strategic to our goal, and we will be working to monetize and unlock the value of these businesses and assets. So the proceeds from such actions, if and when they arise, will then be directed to either debt reduction or to reinvestment into growth and to return a portion back of value back to shareholders. So with that, as we transition into very much a growth-focused enterprise, so the board has also refined the dividend policy to ensure a very sustainable payout, aligning with the commitment to also deliver group growth to the shareholders. So these take into consideration the capital allocation and the requirements of the group, as well as shareholders' return. So at 30 to 50% of underlying net profit, the proposed dividend payout is comparable to industry range, and it also retains sufficient equity for the group to continue to fund its future growth. So with that, I will hand you back to Group CEO to talk about the strategic thrust on the individual businesses.
Thank you, Vincent. Hopefully everybody has a better understanding now of how the numbers will work and how the segmentation will be moving forward. I think the clear takeaway over there is our move, very symbolic move from a postal organization defined by the postal segmentation into the markets where we are growing our logistics ambitions in the Singapore, Australia, international markets. I will now spend a little bit of time talking about the operating businesses in those three markets so that you have a deeper appreciation of what we mean by we're now a logistics operator, we are a pure play logistics enterprise, and how we're moving away from that postal construct. So the first one is obviously our Singapore business. This business, the domestic business, is our flag bearer because it reflects what we stand for in innovation and best-in-class service quality. To be clear, we continue to be extremely proud that the Singapore Postal Service reliability is ranked either number 1 or number 2 in the world. The domestic postal network is unmatched in its ability to deliver to every household and every address in the country every single day. This makes us a market leader in deliveries. Deliveries not just in letters, but deliveries in everything. This is no longer just a letter mail business. E-commerce logistics is a growth driver and a replacement revenue stream that is growing. The e-commerce market is forecasted to grow at a CAGR or compounded annual growth rate of more than 10% over the next few years. This delivery business, which carries both letter mails and e-commerce volumes, will be developed in a way that they do it in a single network. This business is profitable, as shared by Vincent earlier. However, the post office sub-segment is not profitable, and this is due to the high cost of fixed real estate and labor. We expect to optimize this network, innovate with asset-light alternatives, while respecting the Postal Service's obligations, continuing to maintain our high service standards. And we will have a few more announcements coming up soon regarding how we transform this post office business. As demonstrated over the last year, we have worked swiftly with the regulator to correct the loss with a postage adjustment, and this is a significant adjustment. It is with this same spirit that we continue to pursue a sustainable commercial framework for this business together with the authorities, with execution plans being put in place. I'll move on to the Australia business. Our Australia business has evolved into a significant logistics player through a series of strategic acquisitions and organic growth over the last few years. This distribution network is extensive, as you can see, with a wide-reaching footprint across the country and facilities including depots, warehouses, and with our own fleet. This is one of the country's leading integrated logistics players in a huge market that's expected to reach $129 billion over the next 4 years. The Australia business distinguishes itself through its technology-driven 4PL platform. In essence, fourth-party logistics is the management of customer supply chain requirements on their behalf. And we do this with a technology platform that matches customer requirements on one end with service offerings across the B2B and the B2C logistics space. This 4PL platform overlays the 3PL businesses that we have in both distribution, last mile delivery, as well as warehousing, creating synergistic benefits for the entire portfolio. And it is with this asset-light hybrid that we are scaling up the business, serving both B2B and B2C customers nationwide. As part of our strategy to enhance this scale, we have recently completed acquisition of Border Express, the country's 6th largest express pallet and parcel distribution operator. With this now, we have a few businesses that we'll be consolidating. We're taking the next step moving forward. FMH, Border Express, Couriers Please to be integrated into a single business, and this is expected to unlock significant revenue and cost synergies across the group. Our strategy is to integrate, scale, and accelerate this business. We will continue to pursue appropriate M&A opportunities and explore partnerships to explore this expansion. Turning now to our international business. This segment taps on the potential of the global cross-border e-commerce logistics market. It is a sizable market projected to reach $3 trillion by 2028, with an estimated growth rate of 25% annually up to 2028. It represents a rapidly growing market opportunity for us. We continue to build on our advantage of the international postal network to offer connectivity to more than 200 markets. Increasingly, we have been adding commercial solutions as well. This gives clients more service options and more cost-competitive solutions. The launch of our 4PL technology platform as well, codenamed Arrive, will further enhance the customer experience, facilitate faster, better interconnectivity with partners and vendors, and achieve operational excellence. We have a targeted approach towards market expansion, and this includes reviewing opportunities in both origin and destination markets to provide an end-to-end supply chain for our customers. To conclude, allow me to summarize the outcomes against objectives laid out by the strategic review. Following consultation with our financial advisors, the board assesses that the current share price does not appropriately reflect the intrinsic value of the company. And hopefully, as the share price movements have been over the last 24 hours, that reflects the view of the market as well. The strategic review lays out our plans to be a pure-play logistics enterprise and to reorganize and position each business unit for growth in its respective market segment to maximize market share, serve our customers, and facilitate future optionalities. We will strengthen our balance sheet and actively explore the monetization of non-core assets and businesses and recycle this capital. Execution of these strategic thrusts is intended to unlock this value for shareholders and deliver agility and sustainable long-term growth as an international logistics enterprise. That brings me to the end of our presentation. We'll be happy to answer any questions that you may have.
Thank you, Mr. Phang and Steve, for the insightful presentation. We'll now move on to the Q&A segment. Please feel free to submit your questions in the chat. For our Momo audience, do click on the link to join us in the Zoom and post your questions, and we'll try our best to get to as many questions as possible. We'll now proceed with the Q&A session. Over to you, Sunny.
Hey, thanks, Lucas. Thanks, Mr. Phang and Mr. Ik for that presentation. Before we start the Q&A, I just want to comment that the share price of the SingPost has actually risen quite a bit in the past 2 days after this strategic business review. It was up more than 10% intraday, and as of closing today, in the past 2 days, we are up about 9%. So I think the market is receiving this business review pretty well. So we'll move to some of the pre-submitted questions first from some of our members. Since the question will be, since most of the revenue and profit are coming from overseas, example Australia, then why is the management team located in Singapore? Shouldn't the management team be located in Australia to look after the Australian business more?
Yeah, so a good question. I think as we have highlighted in our structure, the business is now reorganized into 3 individual businesses with their own individual CEOs and management teams. So each business, each market has its own structure to run the business. Increasingly, the group at the center, the headquarters, we have been looking at empowering and providing that flexibility, the autonomy to the individual business leaders so that they can conduct their day-to-day affairs and run their businesses. So in the short answer to this is yes, the management team running Australia is based in Australia. It is not any different. But at the same time, we are a group, we are an enterprise, and we do have the connections back to the holding company back here. We drive strategy development, sustainability development, digital leadership, cybersecurity, a range of issues on behalf of the group. But the individual businesses are empowered and are structured to run their own businesses on a day-to-day basis. So hopefully that clarifies the question.
Yeah, that would add a bit more clarity to how come the management team is in Singapore, because we are organizing the different parts of business across the region together. So the second question from the pre-submitted list is, according to the latest financial result, the breakup value of SingPost Group appeared to be higher than the market cap. As you mentioned just now, the intrinsic value of just SingPost building alone is higher than the market cap. So the question was, wouldn't be shareholders better served if the group is broken up and has its own valuation or could be sold for proceeds to realize the value? So now after the strategic review, you have divided into 3 different business units. How is that going to realize the value, and are they going to be assessed or value on each business unit itself?
I think we need to understand a little bit of the history of how this thing has come through. The pandemic has had a very profound implication and impact on the earning structure of the group. 4 years ago, 5 years ago, we were a domestic business, and shareholders would remember that the international businesses, the logistics business, didn't really contribute significantly to the enterprise. 4 years now, fast forward 4 years now, things have changed significantly, and in fact, the fortunes are such that the logistics business, the mainstay, the main contribution, making a main contribution to the financials of the enterprise. We're very cognizant of the fact that this is a structural decline in postal mail. The management team and the board has been very focused on ensuring that we provide consistent profitability to this group. We have certainly gone backwards in profit. Make no mistake, that has happened. It's a function of the situation, the circumstances in the structural decline of mail, the pandemic that has accelerated everything and the cost structures that have gone up. But we have also deployed our firepower very, very prudently, very systematically to ensure that we build a second engine of growth, a second engine of stability, second engine of financial contribution, and that has led to what we have now in the Australia business. We can talk a bit more later about why we chose Australia as a market to develop, but as you can see, the evidence is that we have been able to ensure that the market that we chose and the firepower that we deploy to build this business is yielding us a return. And I'll be happy to let shareholders know that the return on equity of that business alone in Australia is in its high double digits, right? So it is certainly beating the market and the industry average in terms of return on equity. Now that gives us a chance to then rectify some of the issues that we have in the core business. Have we given up on the postal business? Have we said that this is whatever we're doing domestically isn't sensible? I think we are showing the evidence that when we have that opportunity to speak to the regulators around stabilizing the business we have obviously also successfully gotten the facilitation from the regulators, the the authorities to have that near-term fix to the postage adjustment that reflects the true cost of deliveries. This is a regulated business. It takes time to architect this, but there is sincerity, there's commitment, and there's that closeness in relationship that has gotten us to this point. Vincent earlier has also shown the numbers. We are very clear about where the growth is. We have never been unprofitable from that segment of deliveries. As a combined aggregate in the domestic business, the post office business is the one that is loss-making. And there's no surprise. I mean, there's a lot less volume that goes through the post office. That's something we really need to get to. That's something that we really need to reinvent. And this is what we're going to do going forward. So I guess when we look at the contributions from the Singapore business and we're looking at the contribution of the international business, both of which are profitable now, both of which is generating a yield, and both of which, if I can add, will be improving in terms of the metrics of ROE, in terms of the metrics of returns, financial returns to shareholders. We believe that we need to give it the chance to re-emerge and to contribute positively to the business again. We've shown that the orientation has started. We need to make the pivot to logistics. A lot of work behind the scenes around merging the logistics and the postal networks together in the domestic business that will yield the kind of positive benefit going forward. So I think it's premature to talk about the sum of parts from a breakup scenario. There's a lot more that we can do to grow each individual business. We're at the start of it, if we can see the journey of what it is. And the forward trajectory is what I think the market ought to be looking at. Stabilize the business, bring it back to growth, and to make it contribute positively, and to generate that value for shareholders. But then again, what we have been saying in this strategic review announcement is, regardless of all that, there is a certain level of value that is underpinned by the assets that we already hold. The first asset is the billion-dollar property that we already sit on, right? And to an extent, that alone is well, that's the market cap of the business. And we have been very disciplined around, is an asset like that something assigned to the operating business for revenue generating purpose, or is such an asset something we can classify as non-core so that we can seek to maximize the value when the time is right for us to get the best value in unlocking this value for shareholders. So I think the management team is laser focused on ensuring that this underpinning of value continues to work for shareholders while we grow and add value on top of it with our operating businesses.
Okay, thank Mr. Phang for that answer. I think it gives a bit more clarity now. Definitely the structure of the postal issue, we are all aware. I used to write love letters to my girlfriend. Now I email my wife to book a dinner date now. Well, on the postal service that you mentioned just now, the optimization that you said you will share a bit more details later, will you want to share a few highlights now, or do you need to wait a few more days for that optimization plan of the postal service to come out?
I can share some directional efforts that we're going to put into place. I think clearly this orientation that we have into a logistics business is a fact of merging the logistics, the e-commerce delivery network together with the letter network. So at this moment, the business environment is such that sometimes these things are delivered separately. Sometimes they are processed separately. The sortation is separate. With the decline in structural mail, it gives us an opportunity to try to build the e-commerce volumes and capacity onto the postal network, so that you start to see more of that happening. So we're incredibly grateful. Our postmen have been very, very supportive, making the journey with us. So they deliver less letters, but they'll be delivering more packets, more parcels. And that is something that we'll continue to develop. So we're making the right investments to make sure that we can automate all that sortation, all that processing, to ensure that we support them doing properly. The next thing that we will be looking at is the post office footprint that we have. I think and that part I will probably ask for some patience as we unveil the plans in coming days on how we will re-engineer that footprint. What will change directionally? Maybe I can give a bit of color. Directionally, what will change? Maybe the format of the post offices, the way the post offices are structured, the kind of services that are offered in the post office, that look and feel of a post office that is traditional may change. What probably will not change is the service mindset that we have, the fact that we continue to offer that service very pervasively to the community. And maybe if we do the right thing, we can even do that more conveniently. Digital alternatives, we can make it more pervasive, we can make it more relevant to customers now, because more than letters, it is an e-commerce kind of a drop-off service, or you want to deliver a parcel or deliver a package. And that will be how we will continue to develop the post office sector directionally. But if you'll be kind enough to have the patience with us, very soon we'll be announcing more of those plans.
Sure, we are definitely looking to those plans on the optimization. So let us go through one more question for the pre-submitted one before we go to the Q&A question. I see the Q&A, the questions are streaming in. We have 10 right now. So do keep your question coming in. We'll try to get to every single one of them. So one of the questions from the pre-submitted list was, there were rumors in the market that SingPost, it has a high staff turnover rate, with the latest being the CEO of the Postal Service. Is this an indication where the Postal Service is headed? And any comments on the high staff turnover rates?
The question says it's a rumor, and we neither deny nor confirm rumors. I'm unable to comment. We don't comment on staff movements in general. We are undergoing a very profound transformation, as we've said that before. A lot of things have to be re-engineered, have to be changed. We're very, very focused on what we need to get to in the future. Shareholders want value, for sure. Shareholders want us to continue to grow. Shareholders want us to ensure that our revenue generation is relevant. Shareholders want us to do more e-commerce. I'm sure I've already seen some of the questions coming through the Q&A. Certainly, no one wants us to do more postal. In the first place, there isn't that opportunity for us to do more postal. So things have to change, and things have to change in a way that is meaningful, moves the needle the right way, and progress us so that we can do those few things that we said: create value for shareholders, generate revenue in the right way, and to ensure that we have a good, effective cost management of the operation.
Okay, thanks, Mr. Phang, for that answer. We will now move to the Q&A section, the live Q&A section from our audience. One of our live audience, Mr. Patrick Tan, is asking, he remembered correctly about 9 years ago, there was news that Alibaba was going to be involved with SingPost. The share price went up to $2. What happened after that to the business link up with Alibaba?
Alibaba is a shareholder. They continue to be a shareholder. They have invested, that's true. Was it 9 years ago? Maybe. But they continue to be a supportive shareholder. They haven't changed their shareholding. We are working closely. A large part of our international business, which involves e-commerce, cross-border shipments, is through that partnership with Alibaba. So we continue to have that strong relationship with Alibaba.
Okay, thanks for the answer. So we'll move on to one of the next question by Mr. Irwin. With Ninja Van struggling to become profitable in the logistics segment, can you share the difference in regards to how SingPost is able to achieve profitability in this segment? And what is SingPost's viewpoint on the durability of the local logistics segment's profit?
If Irwin, thanks for that comment and the question. As Vincent earlier pointed out, and if you heard what he said, our delivery business has always been profitable. Are we challenged? Yes. Why? Because we've got a lot less mail to deliver, while the infrastructure is set up to deliver a lot more. And while we continue to sharpen, refine, and to make the changes, and to bring in the e-commerce volumes on top in this network, there's a period of adjustment that we always had to go through. There is no avoiding that. But we have been very focused on making this delivery segment profitable. And the reason why our delivery is profitable is, firstly, back in the days of mail, we don't actually deliver to every single home. We deliver to 80% of residents in Singapore live in HDB, as you know, in high-rise apartments. We deliver to one point called the letterbox. We don't actually deliver to every single door. And that obviously changes when things got heavier, bigger, it has to go to the door. The cadence, the operational tempo, that all changes. We have been, and that's to my point, Sunny, earlier, I talked about merging the two networks, equipping our postmen with the right fleet, motorcycles going to vans, bigger motorcycles, handheld devices to guide them with their deliveries. So there's a range of things from a digital standpoint that we are empowering our teams to do so. So we have been moving along quite nicely and picking up that e-commerce volume, e-commerce share in delivering. End of the day, we believe that we, as the most pervasive, we touch every home, touch every address. We are the most pervasive delivery service provider. This is our competitive advantage. We will continue to have that as an advantage to deliver e-commerce. I can't comment about other players. I don't do that in general. And I have no comments about how our competitor is doing, but we will focus on our competitive advantage to make it different. We have the only access to letterboxes for small items. We also have the most pervasive network as a postal delivery player.
Okay. I just want to add an extension to the question with access to the letterbox and small parcel. Assessing the evolving competitive landscape in Singapore, in Southeast Asia, in the region, players like JT Express, Ninja Van. So will you be able to share some of the competitive advantage that SingPost will have as compared to the other players in the market right now, your competitors?
Yeah, every day we deliver millions of items, right? And most of it is letters for sure. But there's still 1 million letters to deliver a day, right? So it is not and that's declining for sure. It used to be 2 million letters, 3 million letters. You can imagine the volume was a lot higher. But there is still a lot of letters. There's a base load. The base load provides for an opportunity for us to transform that postal delivery team with the e-commerce items that we pile on top of that network. So I think that is one of the advantages in the sense that there is a base load. The second thing that we have is that we have access to letterboxes. We deliver smallish items into letterboxes. That is also something that, like I said earlier, it makes it a lot more efficient for us rather than to knock on every door for every delivery. The delivery landscape is an interesting one in Singapore. It's a zero-sum game if you think about it. It's the same concept. It's the same man with the same van, and that's how the game is played. For us, we have a dedicated team that does the deliveries on an organized basis, with a lot more load because of the base load coming from the letters. That is going to be our competitive advantage in the end, and that is something that we hold dear. I want to reiterate the point again that the delivery business, things we deliver, that is profitable. We have a sub-segment of the post office that we really need to get to, and we will be having those plans as we talk about.
Okay, thanks for that answer to my extended question. There's one question about dividend from the Q&A. Maybe Mr. Yik will want to join in the answer. No worries for that. I will just read out the questions first. When can shareholders expect at least 5% dividend?
I suppose that question really is dependent on the performance of the group. We have stated a policy that we pay out between 30 to 50% of underlying net profit. Given where the trajectory of the business is, given how we announced that Q3 now all businesses are profitable, given how the business has been transformed, we are certainly very hopeful that we are on a growth trajectory. We have pivoted the business from a traditional postal business to a growing, vibrant international logistic businesses. With that, we hope that the business continue to grow and very quickly, hopefully, be able to reasonably pay back to shareholders for their patience.
I think, if I may, right, I know there are a lot of questions by shareholders asking on the postal business. I just want to reiterate the point that the postal to us is now a small segment of our entire business. In fact, the domestic business at, you saw the numbers earlier, the breakdown, a revenue size of $200 million is roughly about 12% of our entire global revenues. So that contribution is now smaller, and no doubt it's very public. It is very visible because that's what you see. You open the window, you see it's a post office, you see the postman driving a postal vehicle making a delivery. Bear in mind, for shareholders, you own a company that's a lot larger than this. This is a 12% contribution in terms of revenue, and it's not going to be that big anymore. That same segment has undergone a very, very profound transformation in the sense that it's lost a lot of its earnings because of the structural decline in mail. We have adequately replaced that through time. Certainly, the replacement cycle will take time. It's a period of adjustment. That postal business, that domestic business, at this moment is not unprofitable. We rectified the near-term economics. The true cost of deliveries is reflected, as you are also aware. Name me something that hasn't changed in price for the last 9 or 10 years. Everything has gotten more expensive. We have finally made the change. Postage is a lot more now, significant adjustment to postage. That reflects the true cost of making that delivery right now. So stabilize the business, brought it back into the black. Some of the near-term declines, all that were issues, and the year before that. At this moment, that business alone is not unprofitable. It is profitable. It's generating a yield. It ought to get better. We've identified some levers to move that along. E-commerce versus postal volumes, from a revenue standpoint, we are at the tipping point of being able to replace it, right? A 10% decline in e-commerce or mail revenue can be made up by a 10% improvement on e-commerce revenue. So we can figure that out. There was a time where a 10% decline in postal mail revenue needed a 50-60% increase in e-commerce to make up the deficit. Those days, obviously, you cannot make up the deficit. These days, a 10% negative is made up by a 10% positive. You can just about imagine it is possible. From this point, it is possible to have that replacement. So I just want to put some context around it, around the questions around postal, and hopefully that gives a bit more color on that.
Okay, thanks, Mr. Yik and Mr. Phang, for that answer. I believe we are all looking forward to the underlying net profit of 30%, 50% distribution in dividends going forward. Yeah. So just now we touched on the competitive advantage, which is the last mile delivery, right? How about on the front end? When is SingPost looking at integrating more deeply with the e-commerce platform like Shopee or Lazada to become the preferred delivery partner, or for consumers the top choice when they check out their shopping cart? SingPost will be the partner to deliver those parcels. Is there any integration on that side on SingPost initiative?
Yeah, so a lot of work behind the scenes on developing the digital leadership that we have. If shareholders have been paying attention to some of the news broadcasts that we put out, we have made a very fundamental shift on the digital front. We have moved on the cloud infrastructure. We have moved on the back-end enterprise infrastructure. Some of these things have been things that have to be done after many, many years. Just as an analogy, right? It is a overhaul of the plumbing in your home. The pipes need to be changed. And all these are being swapped out right now. We've undergone the redevelopment over the last couple of years. It makes it a lot less clunky. It makes it a lot smoother for integration with digital natives and digital companies. And there's a good and bad. We've been around for a long time, which means there's a lot of the processes being posted. I'm not making any excuses for this, and I'm being sincere and authentic about this. It takes time for us to make all these changes. And while the pandemic was painful because it caused a lot of these issues, we took the time through all that over the last 2-3 years to also make all these fundamental changes so that we are fitter coming out of it. You will see more of that. I would be, I'll be keen to show off some of those as they come about in the next few quarters once we have some of those results to share.
Okay, so surely looking forward to the integration or the tech development of SingPost, where we can integrate more with the e-commerce players. I'm moving back to the Q&A question, one by Mr. or Miss Xiao. Can't really figure the gender, but it's by the surname of Xiao. Your SingPost building, is it fully paid up? What is the net proceed you will get after settling the loan, if any, if you sell your SingPost building today?
Okay, the technical answer is it is totally unleveraged right now, so there's no debt on the building. We do as an enterprise carry a healthy degree of debt on our balance sheet, but the building itself at the moment is fully paid up.
Okay, so no debt on the building, no leverage on that as well. So you will get the full proceeds without the need to settle any outstanding loan for the SingPost building.
For the building, yes, but for the
Yep.
enterprise as a group, we have probably about 800 over million total in terms of total debt across the group.
Thank you, Mr. Yik, for the answer. So there's a next question from our live audience, Mr. Desmond. The word international seems very vague. International refers to which country, which area? You want to dive into the geographical regions?
Yes, I'm happy to do that, and thank you, Desmond, for the question. International to us is okay. Let me take a step back. So, how do we organize these three geographies, right? The markets that we have: Singapore, Australia, and then international. I'll speak about the first two because it's a lot easier. Singapore for obvious reasons. We are very pervasive. We have a lot of infrastructure. We have a lot of installed infrastructure here. It's our home market. So hence, it is a market by itself, Singapore. Financially, probably not the biggest, but in terms of the installed infrastructure, in terms of the base, is probably the largest. We've got most number of postmen, we've got so on and so forth, properties and all that. Then there's Australia. Australia is a national business, same as Singapore. It's a national business, so domestic Australia, pan Australia. We ship state to state. We organize our supply chain requirements for our customers across the whole of Australia, and it's a national business. Then we talk about international. The international business is more of an asset-light business that connects markets to markets. It's a cross-border business. We do not have as big a physical footprint in any one of these businesses, in any one of these markets. However, it has the biggest span. You saw the map earlier when we showed the slide that we connect to 200 countries. Why? Because from a heritage standpoint, as a postal business, we've always connected with 200 other countries. Put bluntly, if you want to deliver anything to anyone in anywhere in the world, postal does it for you. For most part, it works for e-commerce. For some parts, it doesn't, because you get a patchy response. I see a question soon on sending stuff from one country to another being disappointingly slow. You get a patchy response sometimes. You can send something to another country and then the other postal organization may not do it as well. Some of the emerging countries do have that problem, and we acknowledge that. But at the minimum, if we were to offer this service to anyone, and in this case, we talk about our international customers, if they want to have anything sent in large volumes to any particular country in anywhere in the world, we can do it. But it's our job now to ensure that we couple that with commercial options so that you do not just have a postal organization doing the deliveries. We pick and choose. We will also have other commercial last mile delivery players making the deliveries for us. Our job is to make the transmission across to that country. Our job is to make the customs clearance done, and then work with the partners on the other side to make sure the delivery is done. So that international business really has no bounds. The international business covers the whole of the world. Clearly, some lanes are bigger than others. Some of the bigger lanes that have a lot more cross-border purchases are clearly the Western economies. However, that said, some of the emerging economies are not to be underestimated. Some of the emerging economies are growing bigger in terms of their purchasing power, and cross-border e-commerce items are part of that global trade. So in terms of markets, there's the Americas, there's the Europe, UK, there's also the Middle East, Africa, there's Asia, there's Australasia. So these are the key markets that we are looking at in terms of serving our customers in the international business.
Okay, I hope that will answer Mr. Desmond's questions on the vague international word. It's actually the whole globe that we are talking about here on SingPost network. I think Mr. Phang, you mentioned about some of the mails to the other delivery partners around the countries. The next question here by Mr. Patrick Tan is saying that mails from Singapore to Malaysia is disappointing, slow, often late. Suspect there's an issue not with SingPost, possibly that SingPost will be talking to Malaysia part. Do you have any feedback from your Malaysian partners or your customers right now? I believe definitely it's not a SingPost issue because I do receive my dividends checks in my mailbox very on time always. So it may not be a SingPost problem. So any comments on that? Any on Malaysia side of deliveries?
Thanks, Sunny, and once again, thanks, Patrick. And thanks for phrasing your question that way. It probably makes it a bit easier for me to answer. But before I answer that, perhaps let me share with the audience. We are a high service reliability company. Okay, we had some issues some time back. We took stock, the lessons learned. It hasn't been that way since the last 4 or 5 years. Our service has been top notch, and we measure that every day. Clearly, we don't get 100% perfection, but we are delivering every day, next day, 99% or more every day. And there's a Universal Postal Union ranking of the 200 countries on this particular service metric. And we have, over the last 2 years, either been first or second on that list. So gold or silver medal in 200 countries, basically. Right? So that makes us very proud. And I say it with some humility because it's not that we are trying to boast about this achievement. The fact is, it is a small country. We don't have large remote areas or rural areas. We don't have islands we need to go to. Some of these other countries, emerging economies, have issues because the trucks don't run from the capital cities to the outskirts every day, maybe once a week, maybe once a month. So there are some delays when it's a big country at that. Maybe some of these countries need to take a boat from one island to another. We don't have that issue. Okay, Pulau Ubin basically is the only one that we have, the 20-year-old families that live there that we continue to deliver mail, not on a daily basis. But the majority of mainland Singapore, we have that service 99+% of the time next day. So I think we take that obligation very seriously because Singapore is also small enough, urban enough. We want to make sure that that is the service quality that we bring to all our international businesses. Now, there may be a question, what do we bring to our international businesses? What do we bring to Australia? What is it? We want to be proud that we are a Singapore-based organization with that Singapore-based service mindset and DNA, that we want all the businesses that we have across the world to also adopt that. That is our aim, that's our target. Is there an opportunity to improve? We have constant engagements with our postal brothers and sisters around the world. And we take note of that. Patrick, hopefully, if you don't mind, let me look into this. Sometimes it happens, and hopefully we will provide a good response to you on a customer service angle.
Okay, I hope that will answer Mr. Patrick's question. Thank you for that, Mr. Phang. I want to move to the next question. This viewer live audience, I don't know whether to address as Mr. Poo or Mr. Tan. His question is, SPC has been contributing stable recurring revenue to fund the transition into e-commerce. With that being planned, can CEO please share some thoughts of volatile earnings in the future? CapEx increase significantly. In long term, will shareholder be better served if management can compound the dividends back into the business and build the necessary skills instead of distributing out the dividends?
Yeah, thanks. I'll call you Mr. Tan if you don't mind. Thanks, Mr. Tan, for the question. So I don't really have a straight answer, but I can tell you my thought process. My thought process is we are very focused, and I should have said that earlier in my presentation, we are very focused on generating a return on equity for every business. As we said, Singapore, Australia, international, every single business needs to generate a return on equity above the cost of capital. We are very focused on doing that. And I can assure you that this is how the management team, how the board expects the business to generate the financial returns to our shareholders. It's not good enough to be just profitable. It needs to generate a return on equity, a return above the cost of capital. We need to generate a spread. So that, so if you allow me a small point, that is the reason why even in the domestic business, we know we got into a loss situation. We needed to rectify it. There is absolutely no discussion around us needing to generate a return. That needs to be done. We're a commercial company. That conversation has to be had. We need to write the economics. We need to write the cost so that we generate the right return. So we're very focused on that. Now we're coming to the point of the property. There's a question around value, obviously. So if there's a value in there, do we want to maximize that value if the opportunity arises? You know, property from a return standpoint, ROE isn't great. It will be probably on the lower end of the scale. Our operating, we want to be a pure play operator. Pure play operators should be looking at generating a return of its assets, generating a return of its equity and the invested capital in those businesses, operations-wise. So with property, we see it as there is an opportunity. We're not saying that at this moment. Please, if shareholders can be with us on this one. We recognize the value of the property, where we will be looking at opportunities to maximize that value. It's subject to regulatory approval. It's subject to shareholders' approval. You will be asked the question whether you want to sell this or not. When the time comes, we will also be looking at the right time to maximize this. We also need to look at the proceeds, how we deploy it. Is there an opportunity to deploy this to better investments, better growth? If we can recycle it to invest into something that generates a better return, we will be asking you for permission for us to do this. If we do not have that opportunity to generate a better return, then begs the question why we would want to do this in the first place, right? So I think that conversation will come. I just want to share with shareholders my thought process around how we will go about doing this as a custodian of the property that we have on your behalf. This is how we intend to maximize value. Hopefully that, once again, provides a bit of a narrative.
Okay, thanks, Mr. Phang. I think that helped us answer two questions in one sitting. So I will just have to double up because we still have a few more minutes, and I thank you for extending a few more minutes to answer a few more questions. The next one that I want to go to will be a quick one. Will SingPost close down more post office just like what DBS is closing down the branches? That can save tremendous costs.
Yeah, as I alluded to it earlier. So please, if I think that's from Mr. Wong.
Yes.
I'll call you Mr. Wong if you don't mind. So as I alluded to it earlier, we will be coming out with some announcements very, very soon. So if you could be help me out here, just be a bit more patient. The fact is, what I think directionally will change is, will the post offices change? The format of the post offices will change. Why will it change? Because we recognize that the cost is too high, and it doesn't cover the cost, the revenues from a post office, the kind of transactions that happen in post offices do not cover that kind of cost that we put in. Well, gone are the days where we were so hugely profitable that this is a service that we can offer this way. We have to be very, very tight. Back to my point again, every single business, every single sub-segment needs to generate a return on equity above its cost of capital. So will there be a case for us to have a transformation of post offices? Yes. How will it be done? If you can be patient with me, we'll be releasing that news very, very soon.
Okay, thanks, Mr. Phang, for that question. I just want to add my own opinions to that as well. I mean, we see the banks changing from the traditional banking face-to-face business to more online business. We see McDonald's now doing a self-service ordering with the kiosks. So I think maybe SingPost might be moving in the direction there could be a lot more service that's offered through the counter, can move into a self-service kiosk kind of an operation model that could save a lot of costs on SingPost as well. But I don't need any comments from that. We look forward to your announcement on those initiatives. I want to jump into one question from Mr. Low, I would say. Is the operating model in Australia replicable to other markets like New Zealand or Indonesia? Can SingPost grow beyond the current two markets, which is Singapore and Australia?
Yeah, good question, and I appreciate Mr. Low for raising it. Australia is a very rational market, and it also gives me an opportunity to explain why we invested into Australia as a market. Australia generally is a place where you get rewarded for service. I'm not sure if you've had the same experience as me, but recently when I was there, for example, I took a taxi, and on the taxi fare there was a fuel surcharge, right? Because petrol prices are higher. That is just one of those things that happens, and customers and consumers generally do pay for good service, and some of these fees, when it comes about, gets reflected in the bill. Well, it's very difficult for us to do the same in some markets. Even here in Singapore, I think it's very, very difficult to do some of these things. So there's a rationality behind the market. There's a reward for good service. So I think rule of the law, we're comfortable with the business environment. We like what we see. It happened to be a quality asset that we acquired, a good quality management team, and that's the reason why we invested, and we continue to do that. Now, what is it we can take away from the Australia business? The 4PL concept, the orchestrator of the technology behind the business, connecting suppliers on one end with customers on the other end, is something that is replicable. It is true. We have now the playbook. We have scaled this in Australia. We are looking at furthering the growth, but we are also looking at precisely employing the same techniques to everywhere else. So the international business, you may have heard me say this, is also going to be worked on the same platform, a 4PL platform. And that allows us to scale the international business with the partnerships and alliances without actually the physical asset. So we grow and scale this business through a network much faster, bringing all the capability together than to have to really put up the physical assets and to put up with the cost of investing in those assets. So the model, the playbook is absolutely replicable. Whichever markets, well, that's a different question. Some markets will be better than others. Some markets are more rational. Some markets are more structurally profitable. Some markets we may want to stay out of. So that will guide our actions in how we do this beyond the success that we managed to get in Australia.
Okay, thanks, Mr. Phang. If I may add to that, is SingPost actively looking for a new market?
Let me answer it this way, Sunny. 2-3 years ago, we didn't have Australia market, right? And when I first joined SingPost several years back, one of the challenges we had was we are quite single market focused. We are domestic Singapore. We also no doubt that business was very profitable, and I suspect some of the shareholders that we have on the call today have been with us since some time, and that shows the I guess the resilience of the business. And I think COVID did show that we needed to change that. So I think we're pleased. I won't say that we are done yet, but we're pleased that we have, through a very short period of time, developed a second market, a second engine for us to stand on. So it's stable, right? It's not just that one leg that's shaky. We now have 2 legs. We are strong. We can stand. Now we have the opportunity to re-engineer the domestic Singapore market. But beyond that, I won't say that we will just stop here. I mean, clearly, we need to bed down what we have in Australia. We want to make sure that we integrate it and we digest what we have acquired, and we want to make it even more meaningful. There are operational synergies we want to extract. But having done this, it also gives us the confidence that we probably can do it again. Do we have the firepower? Well, there are some assets that could be non-core. We can recycle. That capital could be the firepower. We can continue to do this. Will it be just as profitable? We have demonstrated to you in a very short time, these were the things we did. Shareholders a year ago asked, your postal business is in an unprofitable position. What are you going to do about it? Okay, we rectified it in short time. We swiftly got to it. Our international business was unprofitable at that point in time because of the issues from COVID. We rectified it. It came out of pandemic. It stabilized. It's now profitable. Australia was, we were at some point in time 51%, at some point in time 88%. We said we will get to scale. We are now at 100%, and we now have an additional acquisition completed that brings us to a top 5 in Australia. We are at scale, and now we are going to reap the synergies, integration benefits. So I would say on all counts, the 3 markets, the 3 businesses, we have moved the needle in a way. More to come in years. Obviously, it's challenging. I won't deny it. It's challenging. The business environment is challenging. But management team is absolutely focused to make sure that we say what we do, right? We will rectify this, we'll build that, we'll scale that, and we continue to bring value to shareholders.
Hey, thanks, Mr. Phang. I just have a risk question on my mind. Just now we talk about the bank analogy. Recently, we had certain bank outages. If let's say one of your trusts is the digital or tech-driven trust, and if there's an outage in the postage network, are there regulatory repercussions on that?
From a regulatory framework standpoint, we are regulated on service uptime. So that there's various services. So clearly that there are some digital services that need to be up, but we are also measured on our physical performance. So I would there's a real example in a sense when COVID first happened. If you remember, COVID first happened, we had a couple of issues. The first was a large part of our workforce were the commuting Malaysians. We had a big Malaysian contingent who continued to commute to work. Obviously, they couldn't commute. And so we had the issue on the day where the borders were shut. We had a large part. We went out to our teams. We spoke to them. We gave them the comfort that if you want to come to Singapore to work, pack your bags, come here. We don't know how long it is, but we will put you in a hotel. And we shouldered the cost. But not all of them came. So we had to then go to the regulator and say, look, I don't think I can discharge the full physical obligation. I think I'm probably going to be more like 85% than I am 95%. Then, of course, those waivers. And so, yes, we are measured very clearly on any outages and any service delivery issues.
Okay, so SingPost is well aware of those risks and will look at that on an ongoing basis to make sure that it's managed well. I think we have time for one last final question, which will take you another 1 or 2 minutes. This question from Mr. Xiao. So is the arbitration case with Mr. Tan Ho Sung resolved? Does SingPost still need to pay him more money?
The long and short of it is that we have been going on this arbitration for a very long time. And we've been updating the market as we go along. Those market updates are factual and absolutely accurate. So I would encourage Mr. Xiao to maybe, Mr. Xiao, if you don't mind, in case you're not Mr. Xiao, to look at our disclosures online. And so those have been kept very updated. So it's still ongoing. The long and short of it is it's still ongoing. There are still a few more steps to go before we can fully resolve it.
Okay. One final question. I know share price has a lot of factors affecting the share price movement, but we have seen a lot of company share price recovered after COVID. But we can't really say so for SingPost before the announcement of this strategic review. In your view, do you have any view why SingPost share price have not recovered as what the other markets or other companies has been doing post-pandemic?
Well, it's my view. It's my view.
Opinion, yes.
My view is like even on this call, and maybe that's also a good parting comment from me to my shareholders. Even on this call, how many questions were about postal? Maybe I would say the majority about postal. Postal is half of the Singapore segment. And the Singapore segment is 12% of my global revenue. And all the things that we've done to grow that business in Australia to make it the top 5, probably within the top 5, the most profitable in Australia, the international business that we have, the value of the building that we have, and the property portfolio. But I can understand why to the market, to a lot of shareholders, the eyes are on postal because it is the most obvious. Because like I said, when you open the door, you see the postman. When you go to the mall, you see the post office. And you hear the news about, oh, letters are declining. You see less and less stuff being delivered. I would like that parting comment to my shareholders to be to understand us a little bit more. It's up to us to share what we've done. Clearly, we are trying to do that. I would consider that movement, if these questions we have today, the majority are about the international businesses that we have, the Australia businesses that we have. It's not that we got some, and I really appreciate it. It gives me a chance to talk about it. But that's where the needle has shifted, right? And if we start to see the opportunities in growth, rather than the fact that, the recurring business, the old traditional heritage business, and the dividend yield and the dividend that's received over the last few years has been in decline. If we start to see the opportunities in the growth, at least help us by understanding the growth opportunity and what the business has achieved. So once again, my parting comments is, through this strategic review announcement, we have made it very clear that we have progressively transformed, probably successfully transformed, from a postal organization into an international logistics enterprise. By all measure, 85% of our revenues come from overseas, 60% come from Australia, 12% come from Singapore. I think there's an opportunity there for us to look at what's ahead of us. So thank you for the patience, and thank you for the continued partnership and trust from the shareholders. I enjoyed the questions that were asked. I think they were great questions. So thank you very much for everyone for pitching in.
Okay, thanks, Mr. Phang, Mr. Yik, for your time today. I think that last comment was very enlightening. I just want to give my opinions to shareholders out there as well. Look at it from a financial standpoint. Look at their outreach. SingPost is no longer a local player. SingPost is a global player right now in the e-commerce delivery segment. So if you look at the financial value, the fundamentals value, intrinsic value, and look at SingPost share price, you should be seeing the value there that SingPost is having right now. So with that, I'd like to thank Mr. Phang, Mr. Yik for joining us today. Thank you for your time. If we did not get to all of the questions, you can visit SingPost website at singpost.com. Go to the IR section. You can post some of your questions to the IR as well. And I'll pass the time back to Lucas.
Thank you, Mr. Phang and Mr. Yik, for your time and sharing. In case you missed any part of today's session, you can rewatch the webinar on SIAS Facebook and YouTube channel. Corporate Connect is our monthly webinar. Do visit us to get our website to get updates on upcoming investor education programs and initiatives. You may also type in the chat box to let us know which listed companies you would like us to feature next. Our next Corporate Connect webinar will be on 9 April, featuring Resources Global Development. Thank you for joining us this evening. Take care and have a good night.